Welcome to the UK, where nothing is owned by the British. Britain is for sale. If you look at the British skyline today, you'll realize that most of it is owned by foreign companies. From the Shard, the Gherkin, to Battersea, much of the buildings you associate with being quintessentially British are actually owned by Qatar, some random Brazilian-Lebanese billionaire, and a consortium of Malaysian investors. What I want to talk about today is how the British business class seems hell-bent on a quest to sell everything in Britain for a quick profit. The story starts in the 1980s, where the government, under Margaret Thatcher, sought to privatize, deregulate, and bust unions, all under the misguided belief that pursuing neoliberal policies would bring about more efficiency and prosperity. Through the Airports Act of 1986, British Airports Authority was privatized, leading British airports to where they are today, with the highest passenger duty fees in the world. And look what that led to. Heathrow Airport, the largest airport in the UK, was sold off back in 2006 to Ferrovial, CDPQ, and GIC, and then sold off piecemeal in 2012 to China Investment Corporation and Qatar Investment Authority, and again in 2024 to Ardien of France and the Saudi Public Investment Fund. As of 2025, the revenues from Heathrow go to 9 different firms from 9 different countries, with only 2% going to one of the UK's pensions, the University Superannuation Scheme. All this led to was higher prices for everything, from the landing fees down to the cost of parking. British rail and public transit didn't fare much better. The London Underground has some of the worst air quality in the world, concert-level noise pollution, and the highest fees out of any major transit system. And we aren't even getting fast transit times in exchange for poisoning our lungs. In the past decade, train delays have cost commuters a total of 252 years of time. And you might say that, fine, our air quality isn't the best, and our airports are rinsing us. But surely our water is good, right? By 1989, Thatcher had sold off Thames Water as well. And what did we get out of it? Higher bills, outdated infrastructure, and a $3 billion bailout that will only raise prices further. If you've taken any economics class, I'm sure you've heard of natural monopolies. Public utilities like water and transit operate most efficiently when they produce all the output in the market. When you divide the market for inelastic goods like transit or water, and add in the profit motive from different investors, you start to see distortions. People are charged higher prices over time, and whenever possible, corners are cut to squeeze out more income. So now you know about how privatization in Britain started. How's it going? Today, the issues continue through from private equity, whose short-term time horizons have crushed the British high street. The failure of Morrison's and Debenhams are the most recent examples of this. Morrison's has been in a downward spiral of price hikes, staff shortages, and empty shelves, as their private equity owner, CD&R, continues to wring them of what remains of their cash. What these private equity firms do is destroy companies, cutting costs in any way imaginable, leaving British consumers with fewer choices on the marketplace, higher prices, and all for what? More finance jobs? This problem isn't limited to supermarkets and public utilities, but everywhere you look. From Boots, Pret-a-Manger, to Asda, you'll find that companies in Britain are increasingly financialized. So as you can see, British airports have changed hands multiple times over the decades to no benefit to the passengers. Our underground is in disrepair. Our utility companies are privately owned. Our everyday companies are being raided for their assets. But let's not be mistaken. The problem isn't necessarily foreign ownership, but a severe lack of corporate and public governance. It's the selling off of key assets, of public goods and services, to private actors who quickly move to reduce quality in the name of profit, and the average investor that purchases British companies being allowed to treat them as short-term investments, looking to saddle them with debt, hike prices, and then quickly sell it off, moving on to the next one shortly after. All this leads to is more offshoring, fewer jobs, and a population that's increasingly pushed into something that approximates serfdom, where you're paid below the value of your work and you have no way to escape the income trap. When you do this on a countrywide scale, you're essentially replacing the foundations of these critical services and core businesses like coffee shops and supermarkets with wooden stilts. It's just a matter of time before it all comes crashing down. What Britain will have is an increasingly extractive economy, one that raises prices and reduces quality, while the end consumer is going to have no alternatives to turn to because all of them have been bought up. Inflation on basic goods will surpass government measures of inflation. You already have this in many fast food joints, where they've already hiked prices 30 to 40% in the past few years. What the UK needs is more effective regulation, guardrails for what investors can and cannot do. We don't need a world where British assets and businesses are traded on the market like your average share on the FTSE, and where profits of already well-heeled millionaires and billionaires are prioritized to the detriment of the common person. Napoleon once called the United Kingdom a nation of shopkeepers, or so the saying goes. But at this rate, We'll be lucky if we're left with the till and a loyalty card.